Let's all try our possible best to help ourselves to ensure we can all run smoothly on this journey because it's not easy. Not easy sometimes. And sometimes most people that receive signals, they always expect that analysts should drop signals in the chat. That one too should, if you are type of such person, be very careful. Most people always want to see signal on the platform. Let me tell you, if you start analyzing signals, you will understand the reason why signals are not always to be dropped. And you're not supposed to trade every day too. I've said this, and maybe in the advanced session on Thursday, I'll talk about that. Signals are not supposed to be even dropped every day. You get it? That is the real fact. Ah, signals are not supposed to be dropped every day. But anyway, so please, I'm saying this to encourage you, not on the other bad side, but to encourage you to buckle your shoes and then also broaden your chest and widen the brain, quicken it, and then also ensure that you can be able to learn and follow the proceedings of technical analysis to grow. All right. Okay, so um, just as I said this morning, our lesson is based on technical indicators. So we will only look at the introductory part of technical indicators. And if God permits, tomorrow through Friday next week, we will take some of the indicators one after the other. Then we will be discussing about them, learning the in and out of it. So now, when it comes to trading, let me take my okay. All right. When it comes to trading, the interesting part of it is that there are different ways of analyzing the market, just as we've started, and we keep talking about technical, fundamental, sentimental, and lastly is on-chain analysis. Okay, so these are the four or the three. I mostly don't add on-chain, but let me add it. These are the four or the three ways of analyzing securities or markets. Okay, and over here in our sessions, those of you who joined the previous ones, we talk about all of these. Sometimes just a little part of on-chain, because on-chain sometimes forms within sentimental. So we discuss about all these things here. And for the past weeks and months, Coach Mo, myself, and Coach Musa has led through the technical aspect of the session through introduction to trading view, how to customize your trading view, candlestick patterns, and also support and resistance. And just last week, Coach Musa also led through um, making entries using candlesticks, right? Okay. So what we are going to do next is we are continuing from that session, and the next part of it is what is technical indicators. Now, when it comes to market analysis, after understanding the candlesticks communication, I mostly call them communication because it's those after understand the candlestick patterns, how they react and communicate on the chart. The next thing that you need to know, there are so many other things that you need to know in addition though. But another way of it is in terms of market analysis, we have what we call price action. Price action. And price action has to do with the candlestick's reaction on the chart and then also the patterns, right? Now, aside that, we also have another form of trading called that is the indicator trading. Okay, indicator trading. Now, aside indicator trading, there are other forms of methods of trading or strategies of trading like maybe smart money, ICT. So all these are different ways of what trading. Some people decide to use the candlesticks pattern. Some people also uses price action. Some people also uses indicators. and some also uses different strategies like the smart money concept and then also ICT, right? So over here, so far, what I could say we've never communicate about or we don't talk about it much is ICT. But from candlestick price action, indicators, and then also smart money concepts, we do discuss most all these sessions here, right? So throughout the week, I could say the reaction of the candlesticks through price action is what Coach Muta led some part of it, right? Now, talking about technical indicators, this is one of the common next way of trading in the entire financial market, which simply means if we're a trader and we're able to learn to understand some of these sessions, we wouldn't be only trade on crypto, but even in forex, stocks, commodities, or any part of the financial market, you will be able to analyze the market yourself, which makes you a proud trader and independent or trader. So when it comes to the use of technical indicators, I see technical indicators as one of the simplest tool or simplest ways of trading. And technical indicators has been existing for many years. Okay, since the 80s and the 90s, they were using technical indicators to trade. So this morning we are only looking at the introductory parts of what technical indicators. And let me take my notes. We're only looking at the introductory parts of what technical indicators. So let's go. Let me know if my audience are with me. All right. Okay. Hope you can all hear me. Am I loud and clear on the line? Am I loud and clear on the line? Can you all hear me? Okay. All right. Very good. So let's proceed. Um, let me see. Okay. All right. So let's look at the introductory part of it. So, introduction to technical what indicators. Right. So I'm opening this information for us to all follow together, right? So basically, the idea of technical indicators, like I rightly said, aside from we say technical indicators are mathematical calculations. This is what makes it so exceptional. Okay, so technical indicators are basically mathematical calculations, and this is what makes technical indicators to be different from all forms of trading. And sometimes trading itself involve mathematics, right? So basically, the idea of technical indicators is based on mathematical calculations or mathematical models based on the price and or the volume of what of an asset or security, right? So they use security because not in only one what do we call it? As a market, right? So these calculations are plotted on a line on a chart as a line on a chart, which can help traders and investors to identify patterns and also trends in price actions of an asset or securities. So the main work of technical indicators is simple, is to help traders to identify patterns and then also um, the trends in price action. So over here, when we are using technical indicators, the core idea of using technical indicators is to help us identify the pattern of what of a chart, right? So maybe the pattern, then also the trend. That is either uptrend, downtrend, or ranging. So whenever we are using indicators, the main idea, so sometimes there will be some traders, oh me, I'm not an indicator trader, me, I'm this, maybe I'm price action trader, maybe I'm an ICT trader, maybe I am what do you call smart money concept trader. They are all ways of analyzing the market, and there is nothing wrong. There is nothing wrong with using indicators to trade, and they work perfectly, right? Now, indicators are such that all these mathematical models has been break down into simpler understanding by master traders who had been in the industry for so long, and they've been able to study these models and they've written them down. So they just help you to identify patterns and then also trends in the reaction of prices. So how the candlesticks are being reacted, these indicators react with them, and for the traders to identify whatever happens in the market, right? I guess someone is following and is getting the concepts right. So now, when it comes to indicators, we said the use of technical indicators can traced back to the late 19th century, right? To the late 19th century. We've got 19th century, 20th century, and then it's 21st century, and now I guess we are in 21st century now, if I'm right. Right? So the idea of technical indicators did not just appear overnight or today. It has been existing way back 19th century. So the common of it is when Charles Dow, one of the founders of Dow Jones Company, and in case you don't know Dow Jones, you can go to either Google or ChatGPT to seek more about Dow Jones. And this one of the securities companies that do investments and also trades, right? So here is it. Dow Jones developed the Dow theory, which laid the foundation for the use of technical analysis in the stock markets. So when you go into the stock market, you may see most stocks traders uses indicators to trade, to analyze the market. So when we want to trace the history or the origin of technical indicators, it has been existing since 19th century. This should tell you that trading didn't start today. Trading has been existing for a very long time. And that is the reason why you wouldn't only be the person who would fail in crypto or in trading, and you wouldn't be the first person to succeed in crypto, but you'll be the first person to succeed in your generation, in your family, maybe. But it has been existing and people has been succeeding in it for a very long time, right? Are you following? Let me know. Are you following? Are you following? Are you following? Are you following? Let me know. Maybe I'm talking to myself, or the network might be misbehaving. Are you following? Very good. Very good. All right. Then I believe we can proceed now. I believe we can proceed. Okay. So let's look at it. Now we said there are various types of technical indicators. There are various types of what technical indicators, each with its own specific calculation method and purpose. Each with its what specific calculation method, and then what purpose. Some indicators such as the moving averages, we'll get there. So when we talk of most of these indicators, every single indicator that we talk about or we are going to talk about has got its own method of calculation. Hmm? And then also the purpose that it serves in the market, what it do mean, its purpose, and how the calculations are originated, right? But in our session, we are going to neglect or ignore the calculations, right? So that people wouldn't run away. There are some people that they run away from the mathematics class, and today, because of trading, because of money, not just trading, but because of money, they've still met mathematics again. You see? So if you really want to go in depth in technical indicators, then you can never run away from mathematics. A typical example is moving averages, right? We will get there. So you should understand that each technical indicator we will talk about has got its own purpose and what it does in the market. And just as we are proceeding, we may see some of them very soon. So we said some of the indicators. So to you, maybe a new member who don't have many knowledge about indicators, when we talk of some of the indicators, we can talk of moving averages. MA, moving what averages. So we mostly short it as MA. And when you go on trading view or in your Binance account or in any of your exchanges, you are going to see them there, moving averages, right? So a brief of it is that some of these indicators are moving averages are used to identify trends. So one of its purpose, for instance, one of the purpose of moving averages to do what is to identify what trends. And looking at a little mathematical background of it, moving averages follows one of the mathematical calculation, that is following the mean, median, the mean, the median, and then also the average price. So moving averages has got calculation that then it entails calculations, right? The mean and then the median. And all these are what we use to calculate to get a real trend of what of um the trend of a moving average, right? So while others such as the relative strength index is used to measure what momentum. So when we talk about the momentum of a market, we mean the strength. So for instance, let's assume this is a candle, this is also another candle. Let me reduce it. Okay, good. You could clearly see that this candle, this particular candle, is very strong as compared to this particular what candle. It simply means this candle is having more momentum. When we say momentum, that is, it's very strong and healthy as compared to this particular what this particular candle, right? So when we use RSI, that is relative strength index, it is used to measure momentum. So the work of moving averages is different, and then the work of RSI too is what is different. Now, in the next one, we are going to look at the classes or types of indicators. So over here, we said it is also important to note that technical indicators cannot be used in isolation. Listen to this. Technical indicators cannot be used in isolation, but rather in conjunction with other forms of what analysis. But rather in conjunction with other forms of what analysis. Mm? So you must always learn to understand that trading is not just one-sided business. That you just learn maybe one side, then you think you are true. It's always work in pair, hand in hand, right? So they said in conjunction with other forms of what analysis, just as when we said, I said, like fundamental what analysis and then also market sentiment. So these are the two basic ways. After learning technical indicators like moving averages and others, you also need to combine or conjunct into with what? With fundamental analysis knowledge and then also sentimental analysis knowledge. Which simply means you cannot only have one side knowledge and then claim it's all. I don't know if you get it. Do you understand what we are communicating? Mind you, this is just an introductory part of what of technical indicators. Someone say mathematics is not a friend. Yes. So we are going to dodge the mathematics here. Right. Okay. Hope you get it. Hope you get it, my dear. Hope you get it. Hope you do get it. All right. That's awesome. Let's proceed. Let's proceed. I'm giving you the introductory part of it so that if God permit tomorrow when we start, it wouldn't be too difficult for us to grab the concepts because you are going to swallow them one after the other, right? So this morning I'm just taking time to for us to have the introductory part of it tomorrow. we proceed, then we continue with the sessions. Okay, now so you need to learn and then understand that you don't only need technical, like I've always been saying, you don't only need technical analysis, you also need fundamental analysis and sentimental analysis to conjunct it with your technicals. Additionally, it is important to be aware that technical analysis are based on, so the idea of technical analysis is based on historical data, past performance, hmm, historical data and what and past performance. Do you get the idea? So when it comes to the use of technical indicators, the main idea, and just as in technical analysis, the main idea is to focus on the historical data of the market and focus on that historical data, and then also all the past price performance, the trader is able to predict the future. And as we proceed today, I'll tell you something. Yesterday, I saw something on the chat, and someone was like, if you know a signal wouldn't work, why will you provide it? When I saw it, I was like, huh, why is this person saying this? Maybe I'm sure that person may be a new member. I can't tell, right? But this is what you need to understand. Okay, so you need to know that when it comes to technical indicators, it's based on what historical data. So we use the past history of the charts to predict the future, okay, or the past price or performance. So mind you that past performance is not a guarantee for future performance. This is what you need to understand. Past performance is not 100% guaranteed for future performance. So when it comes to analyzing indicators or using indicators to analyze the market, even though it is using or it is helping you to trace back price history and using that price history to analyze the future information of the future performance of the market. But you need to also understand that the past performance does not guarantee, is not guaranteed, it's not 100% assured. So in trading, there is nothing like assurance. This is what you need to understand. So sometimes some people will be like, give me a good signal. There is nothing like a good signal, and there is something like a bad signal. So as you are growing in trading, you have to understand some of these things. Hmm? So personally, I don't get excited when I make money. I don't get sad when I lose money. Yes, because I've gone through the cycle of trading and understand some of these things. You always need to be humbled because nothing is guaranteed, both profit and it's not 100% guaranteed, right? But then you can guarantee yourself with your risk management and other strategies involved. But thinking of analyzing the market and you 100% trust your analysis, it's totally wrong. And that is the reason why I can boldly tell you, anyone who tells you that he can teach you how to analyze the market 100% without failing, that person is a scammer. It's a thief. It's a daylight thief. Do you get it? Because nothing, nothing in analyzing the market is guaranteed. Yeah, you may get things right. You may sometimes win more. That is it. But that doesn't mean that everything is guaranteed. So never let anyone promise you something that is well guaranteed in the market. Those times when people join Ponzi schemes, they tell you they're going to use your money to trade for you. Now, the ignorance part of it is that if you don't know that how it entails in trading, you tell us that they'll use your money to trade for you. When market analysis is not even guaranteed, when price performance is not guaranteed, please, the person using my board should stop. Okay? I can see one Emmanuel. Please stop using my board. It's for me alone. Okay. So this is what you need to understand. Price performance is not guaranteed for future what performance. The fact that the price is performing now does not necessarily means it will perform better because things changes with time. Okay. All right. Now let's look at it. So let me know. Are you guys following? 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 Very good. Very good. Very good. All right. We can proceed then. We can proceed. Okay. That's us. Let's go. So now let's look at it. So in summary, what I'm summarizing or what we are going to summarize for this particular introductory section of indicators, what we are saying is in summary, technical indicators are tools used to analyze the price, volume of a security. So we use it to analyze the price and volume of what of security or assets. Okay, and also we also use to identify trend and patterns in the price action. So those who use pure price action, you should also understand that when you are using indicators, you are also using indicators to identify price action. They are all the same. Just that the person who is using direct price action, they focus on the candle's reaction. So basically, when we talk of price action, it is how prices react, the reaction of prices, or how prices act. So over here, what we are saying is technical indicators are used to analyze the prices and volume of an asset. They are also used to identify trends and patterns in price reaction and to make more informed decisions about when to enter and exit trades, right? So if we talk about the benefit, why we must study technical indicators as part of our trading skills and trading knowledge, it will help us to do what identify or analyze the price and also the volume of an asset, identify trends and patterns of a price action, and then also it also give us an informed decision, help us to make good entries and exits. Okay, so understand that when you are using technical indicators, it will also help you to identify or make entries and what exits in your trades. More so, it is important to use them in conjunction with other forms of analysis. If there is any form of analysis, you have to try to build them up so that you can know how to use technical indicators with other forms of what analysis. Okay, right? Okay. Now let's proceed. So the next that we are looking at, then I'll give you the opportunity for you to ask your question if there is any before we proceed taking them one after the other tomorrow. Let's look at the types of what indicators. Let's look at the types of indicators. Okay, so mostly or basically indicators are categorized. There are categories of what indicators based on their functions, on their functions or the role they play. Okay, so we are looking at them one after the other. Then when we are done, I will give you the opportunity you ask your question for today. So now let's look at this. We have what we called trend indicators. Trend what indicators. And ideal, when we talk of trend indicators, these indicators are used to identify trend and identify what the direction of the trend of an asset. So we use indicators or trend indicators to identify the direction. To know that when we talk of the direction, either it's uptrend, so uptrend, downtrend. Mostly these are the two basis direction of what of a market or trend of a market. And the last one is what is ranging. Okay, so we uses these two indicators, or we use trend indicators to identify market trends or market direction. And common example of it is what is moving averages. Moving what averages. Now, mind you, in the course of our studies, some of these indicators may fall within two categories. Some of them may fall within what two categories, so don't be worried when you see them. So we have relative strength index, which is RSI, and then also moving averages, convergence, divergence. Moving averages, convergence, what divergence. All these three indicators are help traders to identify market trend. That is the direction to which the trade or the market is what the market is moving. The direction to which the market is moving. So you should understand when we ask of trend indicators, moving average is one of them, RSI is one of them, and then also MACD is also one of the trend indicators. But mind you, like I said, some of these indicators may fall within two sessions or two categories. Some of these indicators may fall within what two categories. That is what you need to understand. All right. Now, the next one that we have um momentum indicators. Momentum what indicators. We have momentum indicators, and as I've rightly said it here, you can see we said these indicators are used to measure the strength and weakness of an asset, of a securities price what reaction, or market what price what reaction. So over here, the main purpose of momentum, as the word rightly defined, and I just explained the meaning of momentum using candlesticks. Okay, so it is used to identify the strength or the weakness. So, for instance, maybe we have this particular good. We just stated candlesticks patterns here. Okay, different forms of candlesticks, right? So you talk about the morning star and the rest. So over here, what helps the trader is that all those candlesticks, some of them gives you a market momentum, right? And then some of them also, some of them also helps you identify the weakness of the trend or of the market. Do you get it? So the use of indicators or momentum indicators helps you to identify the strength and then the weakness. When we talk of the strength, that's what I'm saying. So for instance, if a candlestick can see the momentum in it, and you can also see the momentum in another candlestick, maybe very light. So looking at all these ones, you may be able to do what see, right? You may be able to identify the strength or the weakness of that particular candlestick. That is what gives you the momentum, right? So common example of momentum indicators are RSI, relative strength index. So RSI again is a momentum indicator. So like I said some of them may fall under two categories. They may be both momentum and then also trend line what indicators. So you need to understand them. Now, we also have stochastic what oscillator, and commodity channel index CCI. And though in our session we are not going to talk about commodity channel index, but we talk about RSI and then also stochastic oscillator as well. Basically focusing on stochastic RSI. Okay, so over here, when we talk of momentum indicators, just see this as some of the momentum what indicators. Sometimes MACD is also categorized as momentum, but it's purely trend line what indicator anyway. So let's look at the next one, volatility what indicator. Let's look at volatility indicator. So now, when we talk of volatility indicator, um, let me know. Are you guys following? Do you get what we are discussing? Do you get the concept of what we are discussing? Do you get the concept of what we are discussing? Do you get the concept of what we are discussing? Are you getting the concept? Are you getting the concept? Let me know. Are you getting the concept? Very good. Very good. Very good. All right. That is good. Let's proceed. Let's proceed. So basically, when we talk of volatility indicators, now these are indicators that is used to measure the degree of price fluctuation, right? It is used to measure the degree of what of price fluctuation. So basically, when we talk of volatility indicators, the main idea is for us to identify how the price is fluctuating, right? And when we talk of fluctuating, how do I even explain it? Mm, okay, so basically, the idea of volatility indicators is for a trader to know the depth at which a price, okay, may go up, may come down within a short period of time. That is the meaning of fluctuation. So how price goes up, how it comes down, how price reacts within a short period of time. Okay. So a common example of volatility indicator is Bollinger Bands, and then also average true index, ATR. So Bollinger Bands and ATR are common volatility what indicator that helps traders to know the depth at which price can easily rise or can easily fall. That is the price fluctuations. So you see that all these indicators have been worked upon by experts who one at a time they've studied this market volatility, that is market fluctuations, they've studied market momentum, they've studied market trends, and they've discovered that this is what they think about the market, and it has been used, tested, and proven by so many people over decades. That is how people can trust it. Now let's look at the last two or three. Okay, so now the next one that we have the volume indicators. Volume indicators. Volume what indicators. So the idea of volume indicators is this. Now these indicators are used to measure the level of trading activity in a security. Is examples include the unbalanced volume OBV indicator, and then also the chunking money flow, the checking money flow indicator. So over here in our session, we will talk about the OBV. So now in trading, it is good to also know the volume. When we talk of the volume, how money flows in and out, and how the prices react to how those income flow in the what's in the market, right? So over here in volume indicators, we would discuss about unbalanced volume. Now the other part of it, the category of indicator that we have the cycle indicators, and I think we may not discuss more that on cycle indicators. So these indicators are used to measure the cyclical patterns in security prices action, like include the the Hilbert transformation, and then also the scarf trend cycle, right? And then the last one that we talk about is sentiment what indicators. Sentiment indicators. So we have 6 categories of what indicators in this session, and we may take just 4 of them. We may take 4 of them to discuss about them. So over here we said these indicators are used to measure the sentiment or the psychology of the market participants. The psychology of the market participants. Example include put call ratio, and then also bull/bearish index. So we will talk about bullish bearish index, and then slightly a little information about what put and call ratio. So the idea of technical analysis via technical indicators, this is how we are going to handle the session based on these categories, and you need to understand the categories. So when you see momentum indicator, when you see volatility indicator, when you see trend line indicator, you may be able to know what it is communicating to the trader and how you should react to what you are seeing or understanding, right? Okay, so basically whilst we are ending this session, let's take the concluding part of it. So what we are saying is that we are going to study how to use these most of these indicators, important technical indicators used by professional technical analysts, which will help you to analyze and predict the market trends, entry and exit points, and make profits or good profits. So at the end of the day, our core idea of studying these technical indicators, and mind you, just as we are saying, these technical indicators have been used by professional technical analysts. They have been used by professional technical analysts for years, right? So you are not the first person to use some of these indicators, and you will not be the last person to use them. Your generation, your children will come and also use them, whilst others are being developed with time. So all this has been done by professional analysts. So it is going to help us to predict market trend, make entries and not exits. And when talk about trading, trading is all about how to make entries and then what exits. These are the two. We just want to know when we can, how you enter into the market and how you exit from the market. That is the reason we are studying all these things. How you make entries and how you make exits. That is the reason why we are studying all these things. So at the end of the day, when we take our time to glance through or to learn through the session of technical indicators, it will empower you and broaden your understanding and knowledge about your trading for you to make an informed decision in the market. Right. Notwithstanding, in the course of our session, whilst we take these sessions one after the other, just as the lesson is indicating, you realize that you wouldn't only need one indicator. At a point in time, I will teach you how to combine series of what indicators in this same session. I will teach you how to combine series of these indicators to use, and combining them would help you to be able to make a well-informed decision in the market. Combining them will do what will help you to make a well-informed decision in the market. And that is how we are going to start everything. And that is how we are going to run this session throughout this week, through next week. That's what we are going to do. And I believe you always get time to follow this. Let me know if you have a question. Let me know if you have a question to ask. Let me know if you have a question to ask. Let me know if you have a question to ask. So this is what we are going to do. We are going to study most of these indicators here, and I believe it's going to help you to do or to learn and understand a well-prepared lesson for you. And I believe after this session, your trading journey too would never be the same. All right, so let me use this opportunity and ask you, see if you have any question to ask. If you have any question, let me know. If you have any question, you have any question, let me know. Right? Right? So if you have any question, please drop your question in the chat box, or you can raise your hand for us to um assist you if you have any question to ask. Mm, okay. All right. So someone is asking difference between MA and EMA in and which is better. Okay, so this is just an introductory part. First, maybe the terms MA is moving averages and EMA is exponential with moving averages. But in the course of our studies, we will take them one after the other. So we've not started with that session though. So please, I urge you exercise patience on that. If you need the difference and explanation to them, how they function, then I will encourage you exercise patience to follow the next session. Throughout this week we will talk about them, right? So that is it. So this is today's session is just an introductory part to technical indicators. We are not just starting to talk about technical indicators, but we needed to introduce it, what it means and how it started, and also its categories as well, so that anytime you take each and every one of them, you may know where it belongs to. That is the reason I shared this lesson with you, so that you can be able to understand. All right, so someone saying doing a great session. Thank you a lot. Okay, is there a possibility of having sports trading trainings back for those new members who would want to start sports trading? So, my dear, I think this is technical analysis, right? Technical analysis, both sport traders and futures traders needs technical analysis. So, if you are asking us via the lesson that we are having, the answer that I can give you is this session is needed by everyone. So far as you are a trader, you need this session, both sports and futures. You need technical analysis lesson. Okay. So if I Israel, if I've been able to answer you right, if not, you can come back again. So Dr. Benson, how many indicators can one use to determine or decide an entry? Yeah, at most is three. At most three or four, it's okay. And then at least two. At most three, four, it's okay. And then at least two. Two. Using mostly, I mostly use at most at two, right? So two, at most four, it's okay. So you can combine to use two or three indicators to analyze to make entries in the what's in the market. And when it's happening, so in the course of our session, you will know how those combination of indicators gives you more confidence, because you become at least your assurance develops very high. Not to say 100% assurance, but then it develops your assurance in entries, right? Okay. So please, if you have any question, you can also drop it in the chat box. So I mean, about how to go in trading sports. Some of us, we don't know how to do sports trading trade settings. Yes, so that will fall under sport what do we call trade settings. If God permit, today is Monday, and after this session, that is what we will be having. That is an hour or 2 hours later. That is what we'll be having. So what is the meaning of downtrend and uptrend? What is the meaning of downtrend and then uptrend? So basically, when we talk of uptrend, Um, so let me see if let me use this. Okay. So basically, when we talk of uptrend or downtrend, let me draw something here to explain. Or briefly, when we talk of an uptrend, that is a market that is going up or rising, okay? And when we talk of downtrend, a market that is dropping, right? That is the meaning of uptrend. So basically, on a chart, you may see maybe candles formation. Maybe the market will be going up like this in that order. This formation is seen as what is seen as uptrend. And then also the same pattern, you may see that it is going down. It keeps going down. Okay, it keeps going down, and that is what we call downtrend. So when the prices of an asset moves downwards consistently or continuously, we may term it as what as a downtrend. And when the price keeps going up, it keeps going up, it keeps going up, we call it what uptrend. So in an advanced session, you may look at it when we talk of higher highs, higher lows, higher high, higher lows. So the formation of prices, when the price forms a higher high and a higher low and higher high, that is when we see that it is on an uptrend. Then via likewise also downtrend when it forms lower highs and lower lows. That is when we see that it's on not it's on downtrend. Okay. So basically, the to layman's understand, when you talk of a downtrend, an uptrend, that is a price that is going up. The rising movement or movement of what of prices is what we term as uptrend, and then the dropping movement of prices is what we term as what as lower low. Hope that is okay, my dear. Hope that is okay. Okay. All right, so I believe your question, you've understood your question and it has been answered rightly. Okay, so guys, if there is any question, you can drop it in the chat box. You can ask, whilst we bring this session to an end. And I believe you've enjoyed the session. I believe you've understood the lesson. Did you understand the lesson? Did you understand the lesson? Let me know. Do you understand the lesson? Have you understood? Have you understood? Today's session is just an introductory part of it, though. It is just an introductory part of it, and we shall move to the next session, starting from moving averages if God permits tomorrow. Have you understood the session? Very good. All right. All right. All right. Okay. So if it's well understood and it has been able to get home, then I believe we will end here. If God permits tomorrow, we shall proceed. We will end here. If God permits tomorrow, we shall proceed. Yes, so this is done every morning. This is done every morning. This is done every morning. So I encourage you to join. And in Ghana, it is 4:30. In Ghana, it is what? It is 4:30. So I will encourage you to join us every morning from Monday to Friday. From Monday to Friday in Ghana, it is 4:30 a.m. 4:30 a.m. So I will encourage you to join the session. Now we have the record. It has been recorded, as you can see here. Whilst you're having the meeting, it's being recorded. So you can also go to YouTube, our Royal Care Revolution channel. Our channel is Royal Care Revolution. So you can go to YouTube and watch the videos again if you still need something, or if you didn't understand, if you couldn't understand anything, you can go to YouTube and then watch the tutorials there as well. Now we have the next session. Let's get prepared. The time will be shared on the platform for us to meet together. I wish you all the best your trading journey. Continue to join the sessions and you'll be able to analyze the market yourself. You become an independent trader. You will think of yourself and think of how to analyze the market and teach other people to how to trade as well. Today is Monday. Let's keep learning. Let's keep growing. Let's make money together whilst other people refuse to learn. Let's keep doing so. If God permits, we shall meet in the next session. I wish you all the best in your trading journey and have a good day. Love you all. Bye.